Hey guys, Tony here. Welcome back. Sunday, May 19th, and wow, what a roller coaster ride GameStop has been for investors over the last week. Previous to this, GameStop had been trading in the $14, $15, $16 range, and then we had Roaring Kitty come back on the scene over the weekend. Monday morning opened up a little bit exciting, and then things just rocketed up in pre-market on Tuesday. GameStop ran all the way from $17 on Friday up to $80 in pre-market on Tuesday morning. As we know, the price has come back down. It closed Friday just around $22. I sure hope that you guys were not listening to the hype channels telling you to hold this thing all the way up and hold it all the way back down, because an opportunity like this to make 600% gains in less than 2 weeks does not come along too often. In this video, I want to talk about how I've traded GameStop over the last couple weeks. We'll talk about the Roaring Kitty effect. I want to talk about that filing that GameStop dropped on Friday morning in the pre-market, the $45 million share dilution, the ATM offering. We'll clear up some of the misinformation from GameStop's press release, misinformation and confusion generally that I hear out on social media. And I want to talk to you about resetting the TA and how we trade this thing going into next week. So stick around for just a couple minutes and let's get right into it. All right, guys, let's talk about this chart and my trading on GameStop over the last couple weeks. And I want to clear up a common misconception that I see in the comments from you guys. You hate GameStop, Tony. Tony hates GameStop. I don't hate GameStop, guys. I hate people that give you pumping misinformation and lie to you about the financials and the fundamentals relative to the price. I have been trading GameStop in and out over the last 18 months as it has been coming down and as opportunities present itself until it gets to a point where I think it is fairly priced for the fundamentals. I did say a couple weeks ago that if it broke out of that declining wedge, that there would be some great opportunities for upward momentum in this stock and that I would trade that. And I did. The week of May 3rd through May 10th, I day traded it and I exited the play at the end of the week like I normally would in a stock like this, waiting for that chance to see how it performs on Monday and then decide if I want to day trade it again the next week. But what I was not counting on was the Roaring Kitty effect. Yes, he came in Sunday night with the tweets and started this thing really rocketing up. In fact, rocketing up so much beyond normal fundamental value that I just was not interested in trying to chase it up, especially with all of the halts that were going on. It made it very difficult to get a good entry, not knowing at what point that elevator back down was going to come. As it was, GameStop peaked in pre-market on Tuesday, and then we started the decline back down. As it was peaking, I did buy puts to capture some of that downward momentum. Those puts expire late in June, and I'm still holding those at the moment. So yes, I do think that Roaring Kitty was part of the catalyst to get things moving last week, but there were also technical and market reasons why it got running. And I really questioned, did he see those same things and seized on that moment to start his tweets? Not only had we broke out above that descending wedge, that resistance line, that was a good technical breakout, something that I had been waiting on. And the other thing we had was a loaded up options chain. And all three of those things converged, Roaring Kitty, the technical breakout, and the options chain, to really provide a lot of fuel to the fire and push this price up. And I'm sure some shorts got wrecked in the process on Monday and Tuesday into pre-market. Now, I'm hearing out on social media and YouTube a lot of talk pumping you guys up about gamma ramp for next week. Guys, I am just not seeing it in the options chain, at least what we ended the week with last week. We'll get a fresh look at the open interest on options on Monday morning when it resets. But as of right now, I'm just not seeing a lot of fuel in the options chain for next week. On top of that, we had that filing from GameStop in pre-market on Friday morning, the ATM offering for 45 million shares. And I do expect, despite what you're hearing from some other people, that they are capturing this immediate price run up, and they probably sold some on Friday, and they will be selling into this week, especially if the price can hold in this $20 range. If investors support it, that is a great opportunity for GameStop to book some more cash onto the balance sheet. And hey, if the volatility is there and the price runs up, even better for them. But that is going to act as some downward pressure on the price until that 45 million shares is knocked out. So keep an eye on the volume, the daily volume, because that's going to be one consideration GameStop's looking at. If the volume is really low, they will sell less shares per day, typically at or around the VWAP. If the volume is really, really high in the beginning of the week, say a couple 100 million shares a day, they could knock out 45 million shares in a day or two. But I don't know what the volume is going to be next week. And if it drops back down to normal levels, then they will probably take a more measured pace to sell those 45 million shares. Just to be clear, I think GameStop did the right thing, taking advantage of a price run up well above the fundamental value. And this is a perfect opportunity for them to sell shares into the market to willing buyers who are willing to pay more than the stock is worth and stack cash on the balance sheet. This gives them a much larger safety net on their life as they're dealing with this decline in top line revenues. And it gives them a lot more time to think about what their strategic pivot is going to be from their current brick and mortar business. This will be the second quarter in a row here that GameStop is booking a major miss on top line revenues. And despite what you hear on YouTube and social media, I want you guys to keep your wits about you and use common sense. Don't get caught up in the hype from people that are trying to sell you on a play that don't really understand what is going on with the top line revenue decline. There is just, unfortunately, a lot of denial about that. They want to shift your focus over to things like profits or SG&A. And yeah, GameStop probably will be profitable this year, but the analyst expectation is for 1 cent of profit. So we will need to track it quarter by quarter and see if they can pull that off this year. And I hope that they do. But when I see the top line revenues getting crushed more than we were even expecting, we need to be careful about how we are analyzing this play. On the bright side, analysts are liking this equity raise that GameStop announced, the 45 million shares that bolsters the balance sheet. And they upgraded GameStop's price target on Friday from $5.60 to $7. Could GameStop get further upgrades beyond $7? Absolutely they could, but it's going to be heavily dependent on forecast of earnings per share or some strategic change in direction from management. And maybe if they have another $1 billion on the balance sheet, you could absolutely see something like that happen. So really deciding when and at what price to invest in GameStop comes down to, are you analyzing it fundamentally or are you more speculating on Ryan Cohen and management? And I really don't care which one you do, but the problem is we have a lot of people that call themselves fundamental analysts, retail, GameStop, YouTube analysts that don't really understand how to fundamentally value the price. Really what they are is speculative analysts, speculative YouTubers, and I have no problem with that at all. There's room in this world for all types of investors, but if you are a fundamentals guy talking fundamentals and financials on your channels, you ought to be able to work out the earnings per share to price and what is a fair price. If you're speculating on future earnings far above what Wall Street is forecasting, you ought to be able to build that case, and some of y'all do. And if you're just speculating on management, then just say you're speculating on management, and that works too. At the end of the day, none of us want to see these companies run into the ground. None of us want to see them shorted, and we all want to make money. We just have different decisions about what is the smart price to buy in. And my price is probably the lowest of them all because I am waiting for the bottom of the chart close to the fundamental fair value. That's just my trading style. You don't have to like it, and it might not be for you, and that is okay. The other thing that I want to talk about here is the cash and cash equivalents. I have heard that some people are confused about what this second line says here, that the cash dropped from 1.3 billion to 1.07 billion. Remember, guys, at the end of the fiscal year, this most recent fiscal year, the company had 1.19 billion in cash and cash equivalents. So this is only about $100 million cash burn from Q4 to Q1. If you read this very slowly and carefully, when it's talking about the 1.3 billion at the close of the prior year, you got to go all the way back more than 12 months to the year that closed a year ago. That is when GameStop had 1.3 billion in cash on the balance sheet. The most recent quarter was 1.19 billion. So the cash burn was not 200 million. It's about 100 million or so. As far as trading GameStop next week and doing any sort of technical analysis today, I'm just going to play it by ear for next week. All of the moving averages are going to be out of whack because of last week's crazy price action. And there's still a lot of excitement in the investor base, so it's hard to say for sure what's going to happen. And as of the time of filming this, I don't know. Is Roaring Kitty going to come back this weekend? Is he going to come back on Monday? That could possibly affect the play, although the last 3 days of his tweeting every 15 minutes did not seem to be able to stop the downward movement. So we're going to play it by ear. I'm not going to make any firm calls for next week, and I will stay flexible in my own trading. As I mentioned, I did buy some puts when the price was way up there for a late June expiration. Those are in a profit right now, and I will be looking to try and take an exit on those next week should the opportunity present itself. Leave me your comments or questions down below. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.
So you wanna go to war with me?